Welcome to another tutorial video from Researchfin.ai. Researchfin.ai is a beginner-friendly trading strategy platform. I am your AI host, Nora. In this video, we will discuss how to backtest your trading strategies the right way. In this tutorial video, we would cover 1. Why you should backtest your trading strategy. 2. What is wrong with the conventional way to backtest. 3. What is the right way to backtest. And 4. How does Researchfin.ai help beginners and experienced traders? Why should you never start trading without backtesting your trading strategy? Very simple. How else do you know that your strategy actually would work? Even if you have been lucky enough to be taught the world's best, super secret trading strategy by the biggest guru of trading, you should never start trading without doing a thorough backtest of that strategy. No strategy in the world is perfect. Every strategy will have both wins and losses, winning streaks and losing streaks, and gains as well as drawdowns. While sticking with a strategy during wins, winning streaks and gains is easy for everyone, it is only during those losses, losing streaks, and drawdowns that psychology plays a big role. If you haven't backtested your strategy, you will have no idea when a strategy works and when it doesn't. What are the normal losses, losing streaks, and drawdowns for the strategy? Without this knowledge, it is very natural for traders to second-guess their strategy and even abandon them during bad times. This is what brings in the inconsistency in trading and leads to failure. So to build confidence to trust your strategy in good times and bad, it is absolutely important to backtest the strategy the right way. Now let's look at the conventional way to backtest and why it is wrong. There are two ways traders do backtesting. First is the manual way of going through the charts and playing out their decisions individually. This is never scalable for two reasons. 1. It is insanely time-consuming to go through all stocks on all days historically for years of data, and it is definitely not the efficient thing to do even if someone has all the time in the world. 2. It is very difficult to process so much data manually. So almost always people will get biased towards selectively picking those that seem to be working in a few instances. This is not an objective analysis of the strategy. The second way is to use backtesting software. This is definitely the right approach, except almost all backtesting software available in the market today either allows backtesting a single sequence of events on either a single stock or a predefined list of stocks. This also creates biases and overfitted results for two reasons. 1. Stock setups are not static but dynamic, and so providing a static list of stocks for backtesting is never a good idea. Setup selection should be based on dynamic rules, and most tools, at least those available to retail traders, fail to provide this. 2. Even those that provide, the backtest runs a single sequence of events picking one set of stocks in the portfolio from the historical data. This assumes that the future will play out in the same way as this past sequence. This is a different kind of hardcoding. Since trade opportunities will not arise in the same sequence in the future, you can already see that there is overfitting happening here. This is why, more often than not, people get great backtest results, but the real trading results don't match the backtest outcome. There are three very essential components to backtesting trading strategies the right way. First, the backtesting should not be done on a hard-coded list of stocks. It should be done with proper rules that identify a dynamic list of stock setups at a given point in time on which entry rules can be applied, and consequently the exit rules. A dynamic list is the only way to mimic real-world scenarios of stock selection based on a set of conditions. The second, backtesting should not just be run as a single unit for an elongated period of time like 10 or 20 years. This actually averages things out across market regimes. Rather, for active selection of strategies, it is important to look at backtest over multiple periods, and especially the recent period of, say, 3 months, 6 months, and 1 year to decide how the strategy has performed recently. Certain strategies perform well historically but may not perform well in recent times. Finally, multiple simulations of backtests should be run picking up different opportunities at random to get a sense of different sequences and paths. Only then can one get a true sense of how results can vary based on different ways opportunities may present themselves. If all these sound very daunting, don't worry. Researchfin.ai is launching soon with a revolutionary trading strategy platform, done right. We make it extremely simple for both new and experienced traders to research, create, backtest, and deploy trading strategies. We even have strategy templates to help you get started. To create or modify strategies, we provide an easy-to-use UI-based rule builder so that you can create and backtest strategies without having to write any code. The rule builder provides you the ability to specify rules for the setup to dynamically select opportunities as they present themselves. You then define entry rules. and exit rules on these setups. When it comes to backtesting your strategy, Researchfin.ai provides a very comprehensive set of tools to do it the right way. The platform automatically generates backtest for the recent 3-month, 6-month, and 1-year periods. But you can run a custom backtest for any period. The platform provides the different metrics to analyze the results, shows distribution charts of the individual trade returns. But most important, the platform automatically runs multiple different simulations of selecting different opportunities in the backtest period to provide a realistic view of all different sequences that traders could have taken. For each of the path, you can see the corresponding metrics, which gives a sense of the variation of these metrics across different trade path sequences. This is the best way to build confidence in your trading system and decide if it is the right one to trade in the current market conditions. Thank you for watching this video. Hope you found it useful. If you haven't already signed up, please visit www.researchfin.ai to get an invitation to the platform when we launch. Also, please follow Researchfin.ai on Twitter to get updates, insights, and tutorials. Please don't forget to subscribe to our YouTube channel, like this video, and share it with your friends and family. Have a great day. See you soon on Researchfin.ai.